In this video, I want to take a look at what has transpired as gold moved down into its intermediate cycle low. I'm going to go over what I think is in store for us and the psychology that traders go through as we move through the beginning, middle, and end stages of one of these larger intermediate cycles. So to begin with, as we started this intermediate decline, as you'll recall, I kept telling people that we needed to have at least one failed daily cycle before gold would be finished with its intermediate cycle decline. This was a daily cycle low here, and that meant that at some point gold would need to drop below this intraday low before we should expect a final bottom. We didn't quite do it during this decline in October, and this whole sideways phase here, we saw a lot of people getting bullish too soon, in my opinion, simply because gold had not completed that failed cycle yet, and as it turns out, that was correct. And as I've also pointed out that usually a bloodbath phase, it will initiate, start once an important support zone is broken, and it usually takes anywhere from 5 to 7 days to complete. Sometimes a little longer, sometimes maybe a day or two shorter, but generally it creates a lot of anxiety. When the support zone breaks, then we start to get this selling panic. And this day right here is the initiation of the bloodbath phase. We broke through this support zone here. And as you can see, if you count this as day 1, 2, 3, 4, 5, 6, it took 6 days for this bloodbath phase to complete. During that time, sentiment in gold reached a bearish extreme, intermediate degree sentiment, and the COT reports became very constructive. So that was the hint that this was a final intermediate cycle low. That was the signal that traders needed to start preparing to enter long positions in preparation for a larger degree intermediate bottom. And now, of course, with the benefit of hindsight, we know that is the case. But what generally happens to the majority of traders is that the bloodbath phase creates a great amount of fear and anxiety, and most people cannot pull the trigger at these bottoms. When they see the market start to really sell hard, instead of thinking logically and recognizing that the selling pressure is exhausting and that the market's going to have to turn and go the other way once you run out of sellers, most people, their emotions take over and they start to extrapolate this final bloodbath phase into infinity, and that's when you start hearing targets of 1100, 1150, under 1050, and of course none of those things came to pass. Now we've clearly got an intermediate cycle low, but it is still very early in this intermediate cycle. We're only 3 weeks into this intermediate rally, and so we haven't rallied long enough yet to create the kind of euphoric conditions that would manufacture or trigger a larger intermediate degree top like we had back here. So during this early phase of an intermediate cycle, most traders, most traders didn't pull the trigger down here at the bottom. I'm just now seeing, I'm getting the usual comments here, when is a good time to enter? Well, the time to enter, of course, was back here, and this is when we did enter. So for people that followed my recommendations, we now have a nice cushion on our position, and there's virtually no way that this can turn into a losing trade for us at this point. And as this intermediate, or as this daily cycle, there should be 2 or 3 daily cycles here embedded within the larger one, but as we get further along in this daily cycle, more and more traders that miss the bottom will start to become panicky, afraid that they're going to miss more of the rally, and so we'll generally get the most buying pressure right as this daily cycle tops. And while we may go sideways next week, I don't anticipate that this daily cycle is going to top until we reach the September highs. We may get a marginal break above the September high. If we do, that'll create a buying panic right at the top, and at that point, then we should get a nice correction down into a daily cycle low. So the chart is probably going to look something like this. Maybe we continue to kind of churn sideways a little bit next week. Traders that have missed the rally will probably not be able to buy. They're waiting for a correction, but it's still early enough in the intermediate cycle so that if we were to get a correction next week, it would look to most people like the cycle is, or the trend is reversing, and we're going to continue the move down that started back here. So most people, if we do get a pullback next week, people that have missed this rally and that want to buy the pullback in real time, the pullback isn't going to look like a pullback because it's still too early in this intermediate cycle. At this point, a pullback is going to look like the trend is resuming and we're heading back down, but that's not going to be the case. It's way too early in this new intermediate cycle for this to for the intermediate cycle to be topping. So if we were to get a pullback next week, it's going to be a buying opportunity, but very few people will be able to capitalize on that opportunity because in real time, it's going to look like the trend is reversing and we're heading back down. But we won't be. It will be a buying opportunity. And so most people will miss that buying opportunity, and then we'll get another leg up in this daily cycle. And as I've been saying all along, when we bought our positions down here, I made it pretty clear that very often a first daily cycle will recover all of an intermediate decline before the first daily cycle tops. So when we bought down here, we were already expecting this daily cycle was probably going to test the September high before the daily cycle topped. But this is the point at which most traders that have missed this rally, this is the point where they will panic and start to buy. Is once we get close to this September high, or if we get a marginal push above it, this is going to look like a breakout to most people. And this is when they will want to buy, and of course that will be the point at where everybody else buys, and so that's why you run out of buyers at the top of a daily cycle. Sentiment, it just gets too bullish, and all of the people that have missed this entire rally, this is the point where they finally panic into the market. That's the point where you temporarily run out of buyers, and then you have to have some kind of a correction down into that daily cycle low that kicks all of these late buyers off with a loss. And then once the daily cycle has bottomed, then the market will be cleansed of that bullish sentiment, and then we'll be set for the next leg up. So I'm going to caution people, if you did not buy down here and you're still not in, and you're you're waiting for a pullback. Maybe we get it next week, maybe not if we just go sideways. Whichever scenario plays out, a word of caution: you do not want to buy once we get close to this September top. The daily cycle at that point will be very mature, and at that point, even if we break out above this September high, that is not a signal that is not an all clear signal to start buying. You would want to, at that point, you would want to wait for the move down into the daily cycle low. And then once things start to look scary, your emotions, your anxiety levels become high, that's the point at where you want to do the exact opposite of what your emotions tell you, and that will be your buy point to enter the market for the next leg up. And I do believe that we are breaking out of this year-long basing pattern, and either this leg here or the one after that, we are going to go above 1400. We might even make it up to 1450 during this intermediate cycle. But just a word of caution: this is how these cycles work. This is how market psychology works. This is, when we get up close to this September high, this is not a buy signal. This is, for us, this will be a sell signal because we bought down here. So what we're waiting for is a test of this September high to take our profits from our positions we bought down here. And at that point, we would unleverage our metal portfolio and then wait for the correction to put our leverage back on. And then we would be leveraged for this next ride up. Ultimately, how far this intermediate cycle rallies is probably dependent on how quickly during this intermediate rally we can break out above this baby bull top. If we can do it fairly early in the intermediate cycle, then we have a lot of potential to the upside to, I would say, at least 1450, maybe even up to 1500. If it takes, I think we're on week 3 this week, so next week's going to be week 4. So let's say if we can break through this baby bull top by, let's say, week 6, then we've got plenty of weeks ahead of us. We could have upwards of 8 to 10 weeks still for this to move higher above this breakout, and in that scenario we would have plenty of time to make it to easily above 1400, maybe 1450, high side target maybe even 1500 if we can break out above this early enough in the intermediate cycle. On the other hand, if we don't break out above this baby bull until, let's say, week number 10 or 11, 12 of this intermediate cycle, then our upside potential is limited, and we're probably only going to go to maybe 1400, 1420 on this intermediate cycle before the larger intermediate cycle tops. So this is all just kind of based on a time scale. The intermediate cycle has a certain amount of weeks to work on the upside, and then there has to be a certain amount of weeks on the downside for the declining phase of the larger intermediate cycle. So the quicker we can break through this resistance zone here in the advancing phase of the intermediate cycle, the more potential there is to the upside. The longer it takes to break out of this, the less potential there's going to be for the breakout to be sustained. But regardless, I do think that this first daily cycle is going to at least test this September high right here. And, we may even test the baby bull top before this daily cycle is finished and we get our first daily cycle low. Then we have a second daily cycle, another daily cycle low, and I believe we're probably going to have a third advancing daily cycle before we start the declining phase of the larger intermediate cycle.